Well, g'day there, everybody. Thanks a lot for joining me in this Thursday afternoon market recap. What I'll do, I'll run through a couple of individual stocks that we have been paying very close attention to over the past couple of weeks. We are seeing some very nice continuations, and then I will recap some of the market movements which we saw across the board, and also a little bit of a divergence which is taking place that you need to be aware of. It's very important that you understand this intermarket relationship. Before we get there, let's move into Walt Disney. Walt Disney today, again, closing up just over 60 cents. You can see our original entry here at 105.70. It is running up to our first target here at 108.21. So this is a nice little move. Again, we are just bouncing off from or drilling into this macro support area. You can see that we've drilled down into it on a number of occasions dating back to May. We've got one touch in May, we've got multiple touches in the month of June, one early on in the month of July, and you can see with that positive divergence which I was speaking about over the past number of weeks, it is starting to play out, and we're seeing price action begin to move in the bullish direction. So I believe it's only a couple of trading sessions really until we hit 108.21. We might slow down around this pivot, but ultimately it wouldn't come as a surprise for this stock to move up to 115.48. There is an earnings announcement. This is due on the 8th of August, so we are going to have to liquidate this position if you are in it prior to that earnings announcement. Today on Facebook, personally, I got stopped out of this. You can see 157.32 was the entry. I got stopped out intraday today at 162.84. This was a really nice trade. Personally, I made about $5.50 on this, built into, or at least in the worth of intrinsic value into those call options. So a very profitable trade. It was a trade again that we were looking to liquidate out of prior to the 26th of July, which is Wednesday upcoming. So I mean, it worked out quite well. Obviously we left a little bit on, or personally speaking anyway, a little bit of money on the table. It did close back up at 164.63. However, a fantastic trade on Facebook, which more or less has run its course. Again, this was the stop which I spoke about yesterday. So both of those trades are working quite well. This came as a massive shock today. HD, a massive breakdown, down $6.22. At the moment, I'm unsure. I haven't actually looked up as to what was the reasoning. There probably was some form of, a material sort of news announcement to do with HD that has flowed through to the trading session that we have just seen conclude. But a massive down day. Look at the volume spike. This is obviously early to earnings. I think earnings is at least expected in the month of August, but I mean, this was a major down day. I mean, this red box, and again, it is red because it is technically resistance. It did hold. However, even as soon as yesterday, I was potentially looking at this bullish if we could push above 155.04. Well, obviously that side or that directional trade has broken down completely, and no longer are we looking at this a little bit constructively. If anything, it does look as though we're most likely going to come down and retest this 200. However, I don't really feel comfortable looking to jump on board with the shorts on HD in the face of a market which just continues to push up, up, and up. Also, we have X, which is United States Steel Corp. It is definitively moving above 23.26, but we do have that earnings announcement on the 25th. That is on a Tuesday. So more or less, if you are in X, you should be out of this trade, certainly by tomorrow, as at the close on Friday. Now, going back into our pro list, this is where it gets a little bit interesting. The Nasdaq continued. It was only up 6 points, but we still have that open window, which has essentially set up between Tuesday and Wednesday's trading session. So it was looking as though we were going to push down and try and fill that during Thursday's session. However, the bulls came back in and pushed price action back up. So we're still looking quite healthy and positive. We still have what appears to be a breakaway gap or a measuring gap on the Nasdaq. So that is very healthy. The S&P 500 left us with what we call a spinning top type of candlestick. It isn't a high wave spinning top, it's just a regular spinning top. A little bit of a sort of a day reflecting a little bit of indecision. Not a whole lot in terms of bullish sentiment nor bearish sentiment, by the way. It just looks as though this trend is slowly and gradually continuing its grind higher. One of the markets which is very important, and this is going back to our previous discussion, is that of the Dow Jones Industrial Average. We did close down. I'm not sure if this is the final print. I believe we closed down at 21,620. So if we take another 8 points off this, I think we did close down more or less 20 points. But more or less the candlestick itself remains consistent. It is that, again, of what we would call another spinning top type of candlestick. We are seeing a couple of relatively interesting candlesticks. We've got a little doji over here. This really represents that of a gravestone doji. We have a hangman, at resistance, or what appears to be a short-term resistance. But at the same time, it looks as though we have a stair-step continuation pattern, or that of a rectangular stair-step pattern. So, or even a wedge, to be completely frank with you, it looks as though this is just a short-term consolidation pattern, which is going to break to the upside. What I want to do for you very quickly is just overlay this with the transportational average. The reason for that is because if I change these two to a line chart, you can see that we're starting to see a little bit of separation between these two lines. The line in purple is the transportational average. The line in black is the industrial average. And whenever you see these lines more or less begin to diverge from one another, you need to pay attention to it. It isn't necessarily a reversal signal whatsoever, but if this divergence continues to grow, if we continue to see the transportational average turn down, and say for instance the industrial average continues to move higher, well then this is a major warning signal that one of these two markets is telling essentially fibs. Now if I just bring up the transportational average, you can see this market for itself. It looks as though we're retesting at the moment this green box, and again this is what we've concluded to be support. So although we haven't definitively reversed on the transportational average, this is where the divergence is really stemming from. If anything, it looks as though we are retesting the pivot, which I've just drawn on my red line. I might actually draw in another horizontal line for you, just so you can see this. And we're already starting to see a little bit of buying action really supporting or coming off from this horizontal line just here, which also coincides with the bottom of our green box. So we're still holding up above the 50 exponential moving average, but it has been quite an aggressive sell-off. We are seeing these oscillators turn negative. However, at the moment, we haven't done any structural damage whatsoever on the transportational average. Now, just to recap some of these stocks, Apple has continued above 148, also 149. Be mindful of earnings. That's a pretty profitable stock for people in that class. Amazon, if people took this trade again above 1,027, you need to be mindful of earnings. Boeing Airlines is still continuing above our previous two bullish triggers. We had two triggers back here, 187 and also 192, which we traded to these two targets a number of weeks ago. So this has been a hugely profitable trend trade for us on Boeing Airlines, but you need to be in the process anyway of closing out some of these trades if you're not already doing so, or if you're still in them. Baidu, there's essentially no trade on this. Caterpillar is very close to earnings. It is holding up above at resistance. That is a pretty good technically looking chart. However, that earnings announcement is a little bit problematic. COP, think about Walt Disney when I spoke about Disney a number of weeks ago. Obviously, earnings is the wild card at the moment, but COP and CVX, they are looking to form bases, and we're starting to see that transitional shift taking place. However, again, much like the narrative, we do have earnings coming up. Google, again, pushing back up into resistance. Close this trade for a profit if you're in it. Be out of it by the weekend and sleep easy. Put that money in your back pocket. Just forget about the actual stock itself until we move and progress through earnings. Goldman Sachs is something that, again, I'm pretty open-minded about. Personally, I think it is going to break above 231, but given the the type of move that I just recapped in HD, that's meant to be in a H and a D. Pardon me, it's horrible writing. Let me just do that again with my mouse. There we go, that's looking much better. We could also see a relatively long dark Morobozu candlestick at the same time. However, I'm only prepared to trade this to the upside. So, I mean, if you want to take a short, that's on your own terms. I'd rather just keep this trigger to the upside open, which I will be speaking more about over the weekend. IBM is still floating around that breakdown trigger at 148. So that is essentially building structure right now. The same is true for Netflix and Tesla. Just to conclude with, we are in no trade on that particular stock. So I just wanted to wish you all a nice weekend. I won't bring you an update as at on Friday. Instead, I'll be doing the pro analysis class over the weekend, which I would encourage you to have a look at if you haven't already done so. All the best, everyone, right around the world. It's James signing off on behalf of Pivot Point Trading. All the best, everyone. Farewell.